Hello traders, this is your stock market outlook for the week of October 3rd, and pretty ugly out there. We're going to look at how the major indexes are performing, the market health indicators, recent watch list and trade performance, and sector performance. These all basically help me decide, this is the process, overall market conditions. Then I decide if I'm going to trade individual stocks, whether we're going to go long, short. Within those stocks, I look for patterns, and then I look for trade triggers within those. So all these things need to occur in order for me to take trades. So this article discusses the overall market conditions. Market conditions are poor. That means I'm not going to be taking long trades this week. You could possibly consider short trades if you do that. But the buying on the long side, just not interested at the moment. It's probably going to take at least a week or so before I would start considering buying, and that's if we get a rally that potentially indicates we could have a bottom in. But as we're going to see, we are right near lows, taking out recent lows in the S&P 500, the NASDAQ, NYSE Composite, and the Russell 2000 is right there. Canadian indexes took out recent lows. The TSX is hanging just above. So all of these in short-term downtrends within much longer-term downtrends. So nothing to indicate right now for me to get bullish. We need this short-term trend to start turning around, some higher highs, higher swing lows. That's going to lead into potentially a longer-term uptrend where we start taking out and building longer-term highs, longer-term lows, where we start taking out some of these levels. But we're a long way away from that right now. So just looking for any sort of bounce to build off of, and until we get that, not even a consideration of taking longs right now. Health indicators also very weak. 3% of S&P 500 stocks are above their 50-day moving average. 12% of all U.S. stocks are above their 50-day moving average. That's this indicator here. We'll look at it in more detail in just a second. It's much easier to make money on the long side when we're moving up in price, and that's generally going to mean that we have more stocks above their 50-day moving average, more than 50%. And when we're below 50% of stocks above their 50-day moving average, we tend to be in a downtrend. Very simple indicator, tells us when to be in, when to be out. Volume, not super important for me at this time. This indicator is how much the S&P 500 moves per day, and big drops, minus 2% or more per day, are generally not good and indicate more downtrending behavior or volatile behavior, which is not doesn't occur during uptrends. So we have big drops in here, which indicated lots of trouble. And they often occur early on in uptrends, where we started to see these bigger drops here at the start of this drop, bigger ones there when we started dropping again here. So they're early warning signs. And again, we're seeing lots of those big drops. So still poor market conditions indicating a lot of volatility. This is the advanced decline line, how many stocks are moving up versus how many stocks are moving down. And we can see, and it's a cumulative indicator, and we can see it's trending down with the S&P 500. The S&P 500 has dropped below its there we go. And it's dropped below its June levels, and the advanced decline line is holding just above its June lows. So that's what we call a bit of a positive divergence, because it hasn't quite confirmed what the S&P 500 is doing. But at the same time, it's trending down. It's making lower lows, lower highs. It's in a downtrend. I see no reason to be bullish about this right now, even though it's holding up slightly better than the S&P. Definitely not something I'm interested in. This last indicator is how much volume occurred in stocks that were moving up or down on the day. If it's 90% upside, that's important. Or if we only have 10% of volume in stocks moving up, that's also important, and that's a bearish. And we have had some significant ones below 10%, meaning almost all the volume was to the downside. And so this is still in bearish mode. We haven't had any days that got up to the 90. This first one's 80%, so we did have one that got above 80, but we haven't hit that 90 mark, and those are possible turning points. But we use all of these together, and right now they are all in poor shape. Another thing I look at is how my recent watch lists and recent trades have been doing. I have not published a watch list in a week or two, mainly because the market's been so weak. I'm not buying stocks anyway, as I talked about, and pretty much everything has been selling off. I do have a few stocks that I had been watching before, and none of them have been moving up. A couple have held somewhat steady, but really, if you're watching 10 stocks, maybe one of them's acting okay right now, like holding up, and it's probably not moving up, it's just holding its ground. And that's not conducive for making money. When we're watching 10 stocks and 7 of them are zooming higher, that's a much easier environment to make money in. So I'm going to wait for that environment before I start deploying a lot of capital. Sectors on the move, pretty much everything got smoked. Energy up a little bit last week, but for the most part, everything down over the last month and over the last 3 months. What I do find a little bit interesting is the cyclicals, industrials, and financials. They're in the top on both the 1 month and which ones were we looking at? Yeah, financials, industrials, and cyclicals. These ones are occurring in the top half of both 1 month and 3 month. So something to potentially look at. Healthcare might be another one. Healthcare is a little low on the 3 month, but it's bouncing back a little bit. Top performer over the last month. How to do over the last week. Yeah, not a bad performer. So another one maybe to keep an eye on. But what I'm really interested in is more about what sectors start taking off once the market starts to turn. So right now, market's selling off. Again, I'm not really buying much. I'm not really interested in buying anything right now. But once the S&P starts to turn, and we'll probably start to see it in here before that S&P starts to turn, we're going to start to see some strong performance out of a couple sectors while the S&P maybe still is dropping or leveling off. That's when I'm more interested. Energy up 1%, that's not really enough for me to get interested. But once we start really seeing the hot sectors, once we start to see that S&P stabilize a little bit, that's going to be interesting. So what I'm doing right now, I'm not taking any new long swing trades. I'm waiting for conditions to improve. I'm always day trading, and that's provided a good income while it's been a really slow year for swing trading. We've had a couple little pockets on the long side. If you were going short, we've had lots of opportunities, but I know a lot of people are more long-only investors, and it's been, pretty much down. We have these little brief rallies in between, but for the most part, it's been sitting on the sidelines if you're a long investor. And some of my capital is in long-only accounts, and so that capital hasn't been deployed much this year. So day trading's definitely helped. I day trade the Euro USD. You can see how that works. And I'm also, there'll be a stock day trading course published soon, working on it right now. And you can also join me. Weekly trading discussions, Monday, Wednesday, Friday. Ask questions, get guidance, discuss market conditions. We talk stocks, forex, swing trading, day trading. And this page is going to stay. I'm just going to update it each week, and then I'll throw the historic conditions down here just for future reference. But I won't be publishing a new article each week. Basically, I'll just update this one to kind of keep it in a static location. So each week you can check that out, and I'll add more to this page, kind of revealing the overall method of how I trade stocks, and so a little bit more of a resource for you as opposed to just a new article every week that just basically glances over the market conditions. But not looking so good right now. We'll see what happens this week, but not taking any new long trades. So for now, that's it, and until next time, happy trading.